Good afternoon. Today is Wednesday, June the 7th, and the time right now in Hong Kong is 2:22 in the afternoon. Now, let's do a bit of a recap as to what Wall Street did overnight. We can see that the US equity continues to go into consolidation with a little bit of profit taking that is taking place. Now, what you can see on the chart here, this is the 4 hours time frame in the Dow Jones itself. We can see Dow Jones actually continue to trace back from the Monday's high of 33,805 even, and of course that is in reaction to the finalization of the US debt ceiling bill passing through Congress and has been signed into law by President Biden. So that was the knee-jerk reaction to the high side, but since then the market has been pulling back, although on a close-to-close basis last night we have a marginal higher closing compared to Monday's closing. So but by and large you can see that the profit taking has already taken place. There is likelihood that for the remainder of this week we may still see further profit taking, causing the Dow Jones itself to pull back to somewhere between 32,200 to as low as 32,000 levels. So this is a good bracket in which to pick up some more long position, although I do believe that upside is beginning to be very, very limited. Maybe we have one more push to the upside and then that's about it. So do be aware of the very toppishness of these US equity markets for the time being. Now, when we look at the S&P 500, we do see the S&P 500 is a little bit more elevated. The high traded on Tuesday was 4,296.6, and we also see a little bit of profit taking, but not by very much. But you can see that on a close basis, it is still marginally higher than Monday's closing. Now, the bracket of prices in which it is trading right now is actually quite vulnerable. I believe the market may be actually coming under profit taking, further profit taking, I would say. The level is 4,268 to 4,308 levels. Okay, between this bracket of prices, which you can see is a dark pink area. So this area, I would believe there should be incentive for those who have been buying all this while to take some profit off the table. And if we do see a pullback, the most obvious level in which it may hold will be the February high, which is at 4,195.4, and even below that, we may see prices go back to 4,162 to 4,168 levels. But by and large, between these 4,162 to 4,195, I think the market may actually find some bottom here for another rally attempt if we come to that. Okay. However, if the market goes deeper than that in terms of its pullback and breaks the April low, which is at 4,049, then that will be a different story altogether. So in the meantime, we just watch. There is maybe a little bit more buying opportunity. Like I said, could be the last push to the high side before we see a more determined selling pressure coming in. Okay. Over the Nasdaq is obviously in the world by itself. We can see the Nasdaq is currently trading at a fresh new high for the year at 14,662.95. And again, this level is within the bracket of prices, which make it very vulnerable to profit taking. And that level is 14,135 to 14,711 or 712. So by and large, we can see that this is where we are right now. If we do see a more determined profit taking, the level to consider will obviously be the April high of 2022, which is currently at 14,277, and even slightly below that, maybe a better place to actually pick up some buying position if you still believe the market is bullish will be at 13,900 to 14,020 levels. So by and large, you can see that there possibly does looks like there may be a little bit more buying interest left in the marketplace, and we will have to watch how it unfolds. Over in Asia, we can see the Nikkei has actually traded to a high. Now, this high is a 33 years high. We are already trading beyond the July 1990 high. The high traded this morning is at 32,708.5, and you can see that market now is pulling back. But before the market pulled back, you can see at the point when it traded to a new high at 32,708.5, we have a very distinct reversal pattern here in the candle bar. This is the 4 hours time frame, and in the subsequent bar we can see that we are seeing more determined profit taking going on. So this could be the start of a more sustained profit taking, and it also may mean that the market may have hit a temporary top for the time being. So do not chase this market ever higher from here onwards. If you are already long, maybe you should want to take some money off the table and be safe. Okay, over in Hong Kong, we can see that the Hang Seng Index has rebounded to just under the pivot point of 19,521. The high traded this morning is at 19,410.5, and I'm currently in Hong Kong, so obviously we can see that the market sentiment seems to suggest there may be a challenge of 19,521. If it fails to cross beyond this level, then it may come under selling pressure, and the what is at risk will be the year low at 18,000. So we will have to watch how market behave at 19,521. However, if the market can actually cross beyond and close beyond this 19,521, then obviously it will open up the possibility of a challenge of 20,800 to 21,100 levels. Okay, but by and large, we still believe that, or rather, I believe that the Hang Seng market is a sell rather than a buy. Okay, so in the mainland Chinese equity markets, we have the CSI 300 beginning to unravel. We can see that the rebound so far from 3,781.4 has been very, very shallow. And if you believe that there's going to be one more rush up, maybe at the current price may be a good price to enter for a technical rebound. But by and large, this market is getting very, very soft, and there is every possibility that it will break the 3,781 towards a much lower level, which is the November low of 2022, currently at 3,665. Okay, do watch out for this possibility. Market may bounce, but top side is going to be somewhere around 3,895 to 3,895 to 3,920 top side. Okay, then the downside will be towards a November low of 3,665. By and large, I will say the trading opportunity is quite limited for this index itself. So if you have no view, that is fine. Okay, over in the energy markets, we can see the West Texas Intermediate crude oil has actually bounced off a low of $70.08 over on Tuesday's on last night's low, and this is actually working out quite well because previously I was mentioning the bracket between $70.03 to $70.96 is possibly an area in which we may actually attract buying interest to re-emerge, and it does appear to be the case here. So if price can still hold above $70.08, there is every possibility we may see the resumption of this technical rebound from $67.01 towards perhaps even beyond the May high of $76.07 towards the $78, perhaps even $80 per barrel. Okay, over in precious metal, we can see that gold price has been quite subdued right now. We have a bit of a gyration going on. The market bottoms out at $1,932.14 to a high of $1,983.50 before it pulled back very sharply to $1,938.20 before it rebound again one more time to $1,966.80. So it's a little bit of a gyration, but in the meantime, I think the market, if it can come back down to anywhere between $1,949 to $1,953, that area could actually offer you another buying opportunity for the continuation of the rebound from $1,932.14 towards $1,989.55 to perhaps even $2,001. So this is a technical rebound, so very, very limited range. So, but let's say you are in the mood to do the scalping, then maybe you can do the buying somewhere near $1,952. Okay, and then see if the market can go up and take out the most recent high at $1,983.50 towards the $1,990 range. Okay, even perhaps $2,000 range. Okay, so over in the silver market, the market has been a little bit more the structure of the silver market looks a little bit more conducive for an extended rally from the low of $22.68 towards perhaps $24.60 and even maybe $24.80. So this is market is building up to be quite a classic three-wave rebound towards $24.60. However, if the market do break the downside, which is represented by this black bold line here, which represents the support line, then the market may actually go down and test the $22.68. But by and large, I would think the silver is a lot firmer than gold for the time being. Okay, over in the dollar index, we can see dollar, it has been holding its line. The market actually top out at 104.62 and then come down to 103.32 and then rebound very sharply to 104.36 before it eased back a little bit. But we can see all the time when the market eases back, especially the pullback here, is only 50%. So now the price has actually traded into this bracket of prices. They may actually be conducive to selling, at least for the short term. And this area is 104.13 to 104.33. So current price is about 104.18. So smack in between. So if you take a sell position and put your stop above 104, let's say 75, in exchange for the possibility the market may extend lower in a three-wave classical pullback towards 103 to 102.50, that will be your profit target here. So if you think it is worth your while, then maybe you can do that trade. Or in the other hand is that the rally from 152 all the way to 104.62 remains very much intact. So what has been we have been seeing so far is a technical pullback. So maybe it may be worth our while to stay focused on the underlying trend, which is going up. Then we should be only buying and not selling. But let's say, for example, you are comfortable trading counter trend, then the current price where it is right now is actually quite conducive for a counter trend trade targeting 103. And then when the price goes into 103, look to establish or rather re-establish with the main dominant trend, okay, which is going up. Now, if the dollar is trading like such, then obviously in the euro dollar, we can see a mirror image because it is exactly the opposite image of what we see in the dollar index. Now, the euro dollar has traded to a low of 106.35 and then bounced to 107.80 thereabout before it eased back very sharply to 106.70 thereabout. And now the market is in between this bracket of prices at 106.85 to 106.90. This level is actually very conducive to actually consider buying for another extended rally beyond 107.80 towards the 108.10 to 108.45 levels in a three-wave classical rebound. Medium to long term, I'm still bearish on the euro. So if you're not comfortable buying the euro, wait for the market to rebound back to 108.10 to 108.45 before you establish with the dominant trend, which is to sell. Okay, over in the sterling, we can see that the sterling rebound has been a lot more sharper and more pronounced than what the rebound that we saw in the euro versus the dollar. The market actually bottoms out in sterling at 123.10 thereabout and rebound back to 125.45 before easing back to 123.68. And right now what we are seeing here, that if we get another bounce back into 124.80 to 125, I think that level offers another opportunity to go short for at least a test of 124. So like I say, this is going to be very, very corrective. There isn't much of a trading range to talk about. So if you're not comfortable trading such a small range, then maybe it is best to step aside and just monitor. Okay. In the Aussie dollars, we can see the Aussie dollars has been kicked up yesterday higher on the back of another rate hike by the Reserve Bank of Australia, which is totally unexpected. Now, over the last 2 months, before yesterday, we can see that the Reserve Bank of Australia has been holding interest rates stable, meaning to say they have already paused. Now, yesterday, they have no expectation that it will actually hike one more round, but it's exactly that they did, and the market was actually unprepared. So the market reacted to the upside to a high of 0.6690 before it eased back. So this momentum that we saw on the upside from the low of 0.6460 does appears to be still continuing. There's a very good chance that market will take out the most recent high here at 0.6710 towards 0.6760 and perhaps even 0.6780. So again, I would love to see this market extend higher before it presents a unique selling opportunity. So in the meantime, do not stand in the way of this Aussie because there is real fundamental behind it, purely on the basis that the central bank has actually high interest rate one more round. Okay, over in dollar Canadian, obviously this currency pair is very much depending on the price of oil, okay, because Canada, after all, is a major oil producing country. So we can see that the dollar Canadian has actually come off very sharply, even taking out the mid-May low of 134. So now the low traded this morning, or rather last night, is at 133.8. 90 levels. Okay, so now as London opens, we can see that the market has been bought up a little bit. So by and large, this market does appears to want to go down, but maybe we can see a more robust rebound, ideally in the three-wave pattern towards 135.20 to 135.50, and then come back down again and go down to test the 133 levels. So by and large, I do expect a rebound, but in a three-wave pattern towards 135.20 for another selling opportunity. Dollar yen has been struggling. Ever since it hit a high of 114.93, it has pulled back to 138.42 and then bounced back to 140.45 before easing back. By and large, I do expect the dollar yen to continue to trade to the downside, maybe even taking out the most recent low at 138.42 towards actually the bare minimum target at 138. Okay, if the market can hit 138, maybe it hit its bottom here. So if the market do bounce very sharply from here, that means to say this is a simple three-wave pullback from 140.93. But however, if the market goes deeper and take out the low at 137.40, this is not a low, this is a pivot line here. If the market does close below this 137.40, that means it's signaling to us that there is something else more severe, that maybe the market will go down and test even lower levels at 136.40. So leave that options available just in case the dollar yen unfolds into a totally different structure altogether rather than a simple three-wave pullback. Now, over the last 48 hours, we have been seeing something quite dramatic, okay? And it's not happening in the traditional asset classes, and it's all happening in the digital asset class. Now, on Monday, we hear that the U.S. Security Commission has actually sued Binance, which is by now, if you have known, it's a world largest crypto exchange, for offering the trading of securities when it does not hold such a license in the States, okay? And not only is the company being sued by the Security Commission, the founder and chairman of Binance is also sued. His name is CZ Chow, and he is also personally sued for this. Now, just 24 hours after that news hit the market, in which we saw how Bitcoins have fallen from $27,450 and slammed all the way down to test the $25 and $400, $25,400. And then just when we thought the worst is over, news came in that the SEC sued also the largest exchange in the United States called Coinbase, and that caused prices to go down marginally lower. So this is the surprise here. Another exchange is being sued by the regulator, but this time the market did not react so negatively. It dipped down to a marginal low compared to Monday to 25,335, and then we have seen a sharp reversal back to the pre news of the Binance being sued, and that is market going back to $27,300, and we have a high at 27,388 this morning before the market comes under selling pressure when London opens. So we can see that this market is gyrating very wildly between a more than $2,000 range. Okay, so where would this market go? By and large, if we can see that the market based on a negative news can actually rebound so aggressively, that is actually a testament to the underlying strength in this market here. So do watch out for the possibility that any more bad news is not going to affect this market here. So because the market has already absorbed the 1-2 punch coming within 48 hours from the regulator, and yet it did not collapse. So that is evident that there is a lot of buying going on in this space here. So do watch out for further volatility in the crypto space. In the meantime, you take care. I'll come back with you with another update tomorrow, and you take care. Bye-bye.